Hey YouTube, I want to talk about what Warren Buffett's advice to the average investor is. Well, first of all, you would have to open a stock account, get a brokerage, but that's real easy to do today. A long time ago, you had to have a lot of money to get your foot in the door, but now you can invest and buy fractional shares. You can start with $1, whereas a long time ago you had to have $20,000 or whatever to get started, and there were high fees every time you made a trade or bought something. So it was really hard for people with not a lot of money to start investing, because you would lose 10% of your money just on the fees. I mean, if you only had $100 to invest, and every time you bought or sold something and they charge you 10%, I mean, you already lost 10%, and then if the stock goes down another 10%, then now you're down 20%. But for the average person, just buying something like the S&P 500 index, that is the Standard and Poor's, basically the 500 biggest companies in America. And some are going to go bankrupt over time, but other companies will take their place. And Vanguard has some of the lowest fees, usually it's like 0.001 or 00 something. So and you get dividends from that, and you just reinvest the dividends, or put a certain amount in each month, and it'll just keep buying more shares. And then 10%, he likes the short-term treasury bills, which don't pay a lot of interest, but you still get dividends. And so if it's really simple, you just buy the S&P 500 index. You never even have to you don't have to look at individual stocks or individual companies. You just buy the 500 biggest companies in America. I mean, so the only problem with that is it's cap weighted. So if you're not a fan of the big tech and Amazon, Google, Tesla, Microsoft, I mean, those are probably going to be like 20% of the market cap, but it's still the best thing to do, I think, for most investors. Is just buy the S&P 500 index and forget about it. Thanks for listening.